Melantrino, global markets reporter at Nasdaq. Joining me for this segment, we have Bob Ras, co-creator of Sologenic, to discuss why tokenization of traditional assets is poised to become a multi-trillion-dollar industry. Bob, it's great to have you with us. Welcome to Trade Talks.
Thank you. Thanks for having me today.
All right, you got it. And Bob, give us a quick background on what tokenization is and how it has the potential to radically transform global trade in traditional financial assets.
Yeah, so basically tokenization is taking the real world asset like a stocks, ETF, or even it could be real estate on blockchain, on chain. And once we are tokenizing assets on blockchain, it's going to give us a lot of benefit, and it's going to solve a lot of problems that they are existing within the traditional financial market, which probably we can touch base on that during the interview.
Right. So what are some of the major financial institutions that are either putting projects in place or they're looking to get major exposure to digital assets?
As you can probably see, you heard about it on the news. BlackRock is one of them. JP Morgan is the other one. And quite frankly, it's very promising. It's great to see that big names that are actually started to look into the tokenization. They realize that there is a value, and with the help of blockchain, with utilizing the blockchain technology, they are going to disrupt the traditional financial market. And we are, as one of the companies that we have been leading in the tokenization industry. I'm so happy to see that. Basically big names are coming into the scene right now.
So Bob, tell us about Sologenic, where you fit in the blockchain tokenization ecosystem, and what are you enabling institutions to do?
We had this vision from 2020, so long time before the big names actually realized the power of tokenization. So we started the project back in 2020, and at that time nobody was talking about tokenization, but probably we were one of the very first companies that we realized the power of tokenization. We completed the technology. It took about a year and a half just to develop such a technology. And during that time, we technically, the idea was to launch a tokenized stocks and ETA trading platform, right? And allow retail investors to come to the platform, tokenize these assets, and start trading, which is still, that's the idea. And we reached out to a few different regulatory authorities back then. It took us about another 2 years back and forth, but unfortunately we couldn't really secure a license, a broker-dealer license, because it was a very new concept. They didn't understand it, so we had that issue. So we actually changed the idea a little bit. So right now, there are two aspects that we are following. We have two goals at the company that we are following right now. So one goal is we have created Sologenic, which is the institutional tokenization solution, allowing financial institution to bring any asset classes. It could be securities, it could be real estate, it could be commodities on chain. So that's basically our institutional solution that we already released that, and we are in touch with a few big players. Just try to get them adopt the technology. From the other side, in terms of launching our own tokenization platform, we are in the process of acquiring a broker-dealer firm. We are looking, basically right now we are at the due diligence step. So once, if that's, if our legal team, they're happy with the due diligence result, then probably we are going to acquire that company, and we are going to launch, the very first tokenized stocks and ETA platform in the world.
Solo Scrooge, sending peace and blessings to you all out there. Hashtag Solo Nation. How's it going, my people? Hope everyone's well. Appreciate you all for the love and support of the channel. Giving you updates on Sologenic, Coreum, XRP, Dovu, HBAR. If you're not subscribed to the channel, hit the subscribe button so you can be first to get these updates. So as we just heard Bob saying, Sologenic was one of the first tokenization platforms to launch. They thought about it before the big players was even talking about it, before the big players realized the capabilities of tokenization. So Bob's been ahead of the game. Sologenic has been ahead of the game, and obviously they launched Coreum, which is a third generation blockchain for tokenization, as well as many other capabilities. And they've been trying to acquire a broker-dealer license. Fast forward to 2026, they've partnered with Texture Capital and are about to launch Sologenic, built on Coreum. So the SEC have provided clarity on the regulatory framework for tokenized securities. So let's get into what that looks like for Coreum. So Coreum Concepts posted the SEC's tokenized security stance, a blueprint for third generation L1 blockchains like Coreum. So January 28, 2026, today marks a pivotal moment in the digital asset landscape. A new statement from the SEC has provided much needed clarity on the regulatory treatment of tokenized securities, drawing a firm line. If an asset functions like a security, it will be regulated as one regardless of what blockchain it's on. This directive, while reinforcing existing principles, acts as a de facto blueprint for how next generation layer 1 blockchains, particularly those like Coreum with advanced smart token capabilities, can become the foundational infrastructure for a compliant tokenized future. The core of the SEC statement revolves around two key models for tokenization and stringent record-keeping requirements. Let's break down the implications for Coreum and similar third-generation L1 architectures. Understanding the SEC's framework for tokenized securities. The SEC statement realized today clarifies that a tokenized security is simply a security as defined under federal law, whose ownership records are maintained on a crypto network. It outlines two primary methods of tokenization. Number one, issuer-sponsored tokenization. In this model, the issuer of the security directly creates and manages the token on a blockchain. The blockchain itself then serves as a master security holder file, a digital ledger of ownership. A critical emphasis here is the need for the issuer to directly manage and link on-chain wallet addresses to off-chain real-world identities, e.g. legal names, physical addresses, to meet regulatory standards. 2. Third-party tokenization. Here, an entity unaffiliated with the original issuer creates a token that represents an existing security. This approach also falls under the purview of federal securities laws, with similar stringent requirements for compliance and record keeping. The overarching theme is clear. Record keeping is paramount. The ability to accurately track ownership, link it to verifiable identities, and ensure proper management of the securities lifecycle on-chain are non-negotiable requirements. Coreum's strategic advantage: native compliance through smart tokens. For a third-generation L1 blockchain like Coreum, the SEC statement is not a hurdle, but a validation of its architectural foresight. Coreum smart tokens are designed with protocol-level functionalities that inherently address many of the SEC's demands, offering a compelling solution for the compliant issuance and management of tokenized securities. 1. Native compliance. Building regulation into the protocol, unlike older L1s where regulatory features are often bolted on through complex smart contracts. Coreum smart tokens can incorporate access control lists, ACLs, and whitelist or freeze functionalities directly at the protocol level. The impact: this native capability means that a tokenized security on Coreum can be configured from its inception to restrict transfers to only KYC verified wallets. This directly satisfies the SEC's emphasis on associating on-chain addresses with off-chain identities, making it a powerful tool for anti-money laundering, AML, and know your customer KYC compliance. 2. The master file solution. Issuer control on chain. The SEC explicitly states that the issuer must maintain the record-keeping system for issuer-sponsored tokens. How Coreum fits. Coreum's smart token architecture empowers the issuer to retain granular control over the token's logic and registry. This means an issuing corporation can demonstrably prove to the SEC that they have direct and continuous oversight over the digital master security holder file, fulfilling this crucial regulatory requirement with unprecedented efficiency and transparency. This shifts the paradigm from merely recording ownership to actively managing it with a compliant digital framework. 3. Streamline reporting and transparency. Bridging TradFi and DeFi. The statement highlights the necessity of integrating distributed ledger technology into existing financial systems for effective reporting. The impact. Coreum's foundational adherence to the ISO 20022 messaging standard is a game changer here. ISO 20022 is the global standard for financial messaging used by traditional finance institutions worldwide. By natively speaking this language, Coreum significantly reduces the friction and complexity involved in integrating on-chain tokenized security data with traditional financial reporting systems. This makes compliance reporting, auditing, and reconciliation dramatically simpler and more robust than on non-standardized blockchain networks. A comparative edge: Coreum smart tokens versus traditional and generic crypto tokens. The difference between traditional finance securities, generic crypto tokens, and Coreum smart tokens is stark when viewed through the SEC's lens. So feature: traditional database securities, then you got standard crypto token generic, and then Coreum smart token, tokenized securities. So record speed: the traditional database securities is fast, standard crypto token is variable, Coreum smart token is instant finality. Transparency: traditional database private and opaque, standard crypto token public and anonymous, Coreum smart token public, permission, KYC required. Compliance management: for the traditional database it's manual and centralized, for standard crypto token it's hard to enforce, Coreum smart token protocol level enforcement. So regulatory fit: traditional database high, standard crypto token low, Coreum smart token high per the SEC January 2006, since the SEC has provided more clarity. Security control: for traditional database issuer managed, standard crypto token decentralized, often immutable, for Coreum smart token issuer control, configurable logic. So Coreum smart token is at a higher advanced level. It wins in record speed compared to the rest, it wins in transparency compared to the rest, it wins in compliant management compared to the rest. The regulatory fit is high just like the traditional database, and is very similar with security control, but maybe a bit more secured, So this comparison underscores that Coreum's architecture is not just crypto friendly, but is purpose built to execute regulatory compliance within a decentralized framework, making the process inherently more efficient and auditable. The road ahead: technology aligns, registration is still required. While Coreum's technological framework addresses many of the operational challenges of tokenized securities, it's crucial to reiterate the SEC's final point. Technology makes compliance easier to execute, but it does not waive the need for registration. Issuers of tokenized securities, whether issuer sponsored or third party, will still be required to undertake the necessary registrations, proposals, or requests with the Commission. In essence, the SEC statement acts as a green light for innovation, provided that innovation is tethered to established regulatory principles. For third generation L1 blockchains like Coreum, with their built-in compliance features and enterprise-grade design, this marks a significant opportunity to become the foundational layer for the next era of financial market, a world where securities are not just tokenized, but are natively compliant and seamlessly integrated into the global financial ecosystem. The future of finance is digital, and the SEC has just provided a clearer roadmap for how to get there responsibly. Blockchains like Coreum are now perfectly positioned to lead the charge. In the next article, we will look into what role Sologenic and Texture Capital will play, utilizing solotex.com to tokenize securities. So this is big news. Bob and Reza was way ahead of the game when they built Coreum, which is a third generation blockchain. Everything the SEC is talking about in this framework, Coreum adheres to. There's no reason why Coreum can't be the leading blockchain for tokenization, especially when the big money comes in and we get a flood of liquidity into the systems. So this is big. So I had a bit more to talk about, but I think we'll do that in the next video because this was quite long reading through it. And I know some of the viewers have a short attention span. So before we go, let's take a look at crypto bubbles. The market's red right now. Sol down minus 4.6%. Shiba down minus 4.7%. XDC down minus 7.2%. HBAR down minus 5.3%. Quant down minus 6%. BNB down minus 7.7%. Crypto bubbles. And for the traders, liquidation heatmap. Last 24 hours, 870.67 million wrecked. 709.55 million of those that went long, and 161.12 million of those that went short. So my people, appreciate you all for the love and support of the channel. If you got anything out of this video, hit the like button, hit the subscribe button, share the video for me. I'm Solo Scrooge with the Solo News. I'll catch you on the next one. Peace.